Yes, 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 yes. Make sure we're up on YouTube, man. What's going on? Got some technical issues here. Give me just a second. We'll let some people come in. Second you decide to become somebody bigger than you were last month, ego plays a trick on you. Let's turn that down. Yes, yes, yes. Welcome to the Money Flow Sunday service, man. And that's a play on religion, but not in a disrespectful way, in a respectful way, in the sense that you got to be committed, man. You got to be committed to what you're doing, to the process, to the philosophy. That's all this is me documenting that for myself and then sharing it with people. And what it's about is a movement of price in the stock market. That as I would watch prices move up and down, trying to figure this out, man. Trying to figure this out. And just watching price bounce up, down, in what appears to be chaos. And I've talked a lot about chaos. I've written about chaos. Chaos is the force of, it's the juice of the market, the ups and the downs, and trying to make sense of it. And people try to make sense of it intellectually, and maybe they are. Maybe people are smart enough to do that. Maybe you could go off just gut hunches. Just I feel like, yep, all in on that. We could live like that. I've found that to be tough, man. Remember, nothing is ever lost. But what you give away, you always get to keep. You might think, well, man, I wasted time doing that, or all that time spent, then maybe you lost money. Trading, it can be like that. You might work all week, trade all week, study all week, do what you're supposed to do all week, and all week you just lose, or the market moves against you, or your strategy's not in tune right now, or you're on the wrong side. Maybe you're weighted too far. And it can feel like all that work, all that effort was for nothing, man. Remember, nothing is ever lost, because what you give away, you always get to keep. So in that process, you're giving away your time. Most of the things that are going to pay you the most money in life, you're going to have to do for free. That's the bipolar nature of it. That's honestly effed up, man. It's messed up, man. It's messed up that the most money you'll ever make will probably be somewhere right next to shit you would have done for free. It's weird, man. Especially to the working man who's only made a living based on wages, where you're paid per hour to pick up this box or move this widget or stack this over here. Or when these come in, you do this, just do this. It's not that you grew up necessarily as a 12-year-old boy, were dreaming of being an inventory clerk, or you were dreaming of driving for Amazon. You're like, man, that's my big goal. That's what I hope. Right? No, because when we're little, we have crazy aspirations. Like, it's unlimited. It's when we become adults, we start strapping down on ourselves, because we begin to see everything based on current circumstances, not possibility. Current circumstances. And we begin to make decisions based on these current circumstances. One of the things I began to realize in the stock market is sometimes I would do that. I would make a split-second decision based on where the Dow opened, or the S&P, or what this stock did, or what that person did. And bam, just like that, I could completely change my mind. It's like I walked in and walked out. Walked in, accidentally walked out with a new car. Bam, just like that. 5 years of now you get to live with this. Decisions. In the stock market, we don't have to do that, man. We don't have to react like that. We can begin to try to build some sort of order out of what we see and what we expect. So sometimes just expecting it, knowing it's going to happen, knowing what to expect on that, brings such order to the chaos of the stock market. There are people that were confused that the market turned around last week. We weren't confused. It was supposed to. Or 2 weeks ago now. It was supposed to turn. That's what the indicators told us. Right here. Years and years and years I explained this. See this thing called relative strength index? This measures velocity of price. These little bars on here, these are your friends. These are the days. This is history recorded, the print, where you woke up, when you went to bed. Boom, boom. It's the high, the low of the day, man. It's the high, the low of the day. Market opened on the tick to the left. Market closed on the tick to the right. And if that's a candle, it's filled in. It's colored. Same thing, tick to the bottom left, tick to the top right, or vice versa. It could open and close lower. In each one of these days, tell us something. And as we watch, and then if you meet someone like me, let's say you've never done anything in the stock market, and you meet someone like me, and he's like, hey, see these here? This is called a moving average. I mean, why does that even mean anything? And so as we study this, as we look at price charts, we begin to realize that we can kind of see into the window of the stock market through the movement of the market. And these indicators, we call them, can help us do that. It's like it's not that we can execute. You don't need a chart. You can just hit buy on your phone. Boom, you bought some stock. Why? I don't know. I like it. That's it. That's the only reason you need. It's that simple. That's how little the barrier to entry. And you just click a button. Boom. You could click it right there, buy it, and then what? Then it goes down. You know, if the guy bought it based on that click, or he heard something, or a friend said, well, look, man, it's been going up. It's going to keep going up. That may be true. Probably is. 70% of the time, where's it at? Stocks go up, man. This is the core teaching of the money flow. The stock market moves in 4 stages. The stock market goes up as much as 71% of the time. The problem is it's not a straight line. It doesn't go straight up. Okay? Prices can only do one of 3 things. Move up, move down, move sideways. And the up is a lot like the down. The direction's just different. Up, down, sideways. That's it. That's all the stock market can do. So if you walked into a casino and I said, hey, let me show you some games. Over here we got blackjack. Over here we got, some people don't play at all. And then other people are very interested in the game. And some people become obsessed with the game. I mean, you can play a game and they'll give you money. You're like, yeah, okay. How do you play? Well, this game here plays every day, man. Every day. Prices are moving. Every day, stock market opens, stock market closes. Some people think one day it won't open. They're so scared they don't play at all. It might go down. And then they go spend all their money. Here's the crazy thing. The money they're putting in, they're going to spend it if they don't put it in. It's already gone to zero. So even a trade that you buy that goes to zero, it was already going to zero. Because you're like, I mean, just think on this philosophically. Well, I could have bought this with that, so it's gone. All your trades are zero. It's going to zero. Because if you just give them the money, they'll spend it. Goes to zero. But, you know, maybe it gives you a little something, but the money's going. So the reason I say that and like maybe think on it that way is like once we philosophically understand the risks that we step into, that every day when we step into this game of uncertainty and risk, man. And so I don't know tomorrow. So people, man, what do you think it's going to do? I don't know. I really don't know. Don't care. It'll still be here. Because 70% of the time, it goes up. Now, I have to, I don't know if other people believe that, but that has made me a wealthy man. I just believe it. No matter what. No matter the circumstances. No matter how bleak it looks, politically, socially, no matter what is going on, my message never changes. Accumulate stocks. Because over time they go up. That's it. It's so simple. And once you believe that, man, you're freed. You're freed from a lot of baggage that other people carry. A lot of hang-ups, a lot of stupid moves. You don't have that. You may not like what you see, but you know, guess what? Guess what? Markets go up, markets go down, okay? And you'll see this pattern of movement. And even though I know the pattern of movement, I don't know where it's going, man. I just know when it's in, what it's doing, right? And it goes up. It goes. This is the S&P 500, by the way. It goes over. And the way we're able to construct that, and you may be like, well, why did you draw it there versus there? And we can get to that in other classes. But what you're seeing is a movement of price. See it? And if we were to connect the corner points there, what do you see? You see this flow of price moving like this. And that's just an overall pattern. In the money flow, in the very beginning on the first page, I talk about it being a fractal pattern. A fractal is a never-ending pattern. This never ends. Every day. So when people don't like you this week, and you're like, oh, I'm all alone. No, you're not. The S&P 500's here for you. It'll be there tomorrow. Like a good neighbor. It's just going to wake up, and there she is. Every day. Stocks are waiting on you. Inviting you to play or to watch. You don't even have to do anything. They're just like, hey, watch me. Could you watch me? And there's people, they can't watch. I'm so busy. I'm like, you're so busy you can't open your eyes? Laying in, you can't look? Like this wealth game can be built in bed. It's so simple. All barriers of entry are nonsense. Anyone can do this. Anyone. And it shocks me the number of people who avoid it. Now, that's not you, of course, but maybe we got somebody new. Maybe somebody new needed to hear that if you don't play this game, you're not a smart person. You're not. You're making very dumb decisions in life. Wouldn't you agree commonly? Like a very smart thing to do would be to be in the stock market. I don't know who could argue with that. So to not participate, right? So once we have that off the table, we're participating. Okay. Now we have to develop some kind of philosophy to approach this so that we're not freaked out or panicked, and we can have some kind of sense of what's going to happen. So we talk about this all the time. The 200-day, this gold line. Don't ask why. Just drink a beer and accept it as true because I said it is. When it hits it, it almost always stops. I can show you 1,000 charts. Imagine if I came up and showed you a picture and I said, okay, sir. And I show you a picture of something. And then I say, look, next week, I show you a picture of something. And I just keep showing you pictures. And then, oh, well, this one's not perfect, but then look at this one. After a while, you're going to be like, wow, obviously there looks like there's a pattern. There's a pattern to this. And if you go to the ocean, water rolls in, water rolls out. And if you look, the little lines in the sand, it's like a fucking pattern. And it's like, same thing. Boom. And guess what? Whether you go to the beach tomorrow, it'll do it. The pattern, it'll be there. Meaning the beach goes without you. These patterns are all around us in nature, man. In the stock market too. And so all big moves up start with price above this green line. You don't ask, just go with it. And just take that for yourself and go, okay, what is this green line? It's just it's a numerical average of the chaos that you see on this bar. Little tick to the right, the left, where it opened. That's where stocks opened. Little tick to the right, that's where it closed. The close is always on the right. The open is always on the left. You see the certainty? Now, you don't know if your boyfriend or girlfriend's going to be in a good mood today. But guess what? The S&P 500 will close on the right and open on the left. It's for certain. So there's certain things here. The market will open. Might be lower, but it'll open. And it'll keep playing. And 71% of the time, it'll go higher. With moments of chaos in between, that's what we're trying to figure. Now, if you want to be a, quote, trader, which is very difficult, by the way, and you can't trade exactly like me, and I can't trade exactly like you, because part of trading becomes intuitive. Meaning, yes, the coach is a great coach, and yes, Bill Parcells had a great play, but Tom Brady takes the snap and shit's changed. And based on his numerous snaps following the system blindly, he's developed a core set of skills. See players move, judge distance, thrown the ball thousands and thousands of times. Not only that, but in this current market or to that current receiver. And through that process of repetition, He's built skills. And inside of skills, only once you have acquired skills do instincts play at all. So a doctor with an innate skill, if he was doing a search, could call an audible based on what he sees. And as a car driver, based on repetition of driving over and over and over, you can react without consciously thinking about it because of what? It's against the law what you're doing, but what? You're reacting to the situation. And so genuinely, no, we don't do that. But in this current situation, we had to. That's called instinct. What new people do is almost always get that wrong because there's not enough reps put in to make instinctual calls that are accurate, that work, because you haven't seen enough repetition, right? And so as we start, we want to be super disciplined to a way where we're trading based on a certain philosophy over and over and over. Whether that is watching Reddit for meme stocks, okay, boom, that's my trigger. Now I put them in my list, and now I'm following those stocks they mentioned. Now what? What's my buy signal? It's not because a dude said it. A dude said it was what put it on my radar. Okay, now it's on my radar. And so I got to take my, whoa, what happened? It's now on my radar. And so what the money flow is just acknowledging this is how price moves. You know, not perfect, but it breaks out. When it breaks out, it runs. And it'll only run so far, and then it stops. And they're like, oh, but it's based on the Fed. I don't know what it's based on. I don't need to listen to any of their bullshit. Anything people are babbling about, it's either going to go up or down, okay, at the end of the day. And the players and the people in the middle get changed out. Where'd the SPY go? There's different reasons. Stocks react for different things. And you can go read on that shit if that helps you. If it makes you feel better to know why. Why was in red today? Sellers. Why was it black today? Buyers. You need more? Well, the folks in this area they emotionally responded to a tweet. They didn't like the context in which the guy tweeted. So they sold their stocks. And the market moved down. And there are people who play on that. Now, I don't know how you would use that information. I don't know how you use information flow. I can't get ahead of it. I'm not fast enough. I'm doing other things. I can't sit and watch Twitter. Now, if I was a day trader, you have to do that. That's why I don't think most people can be day traders. First off, they got the attention span of a minnow. The number one watch videos are 15 seconds or less. You're telling me they're going to sit disciplined, staring at a screen, watching multiple monitors to execute exactly the same every time they see the breakout without missing it? Uh-huh. Who are those people? There's some, I guess, right? Oh, in the meantime, you got to pay rent, right? So what happens is a lot of people, when they approach the art of day trading, which you can make a lot of money, they half-ass approach it. They're not committed dedicated to it. They don't have 6.5 hours uninterrupted time every day just staring at a monitor, several monitors, taking news flow, setting up their things. Now, some do. But that's the game you're playing in. And a very small number are taking money from the other people, man. And so if we half-ass play inside of that game, I don't know how you're going to react fast enough. Maybe. And if you think you can, you can. Because this game is fractal. A fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again in an ongoing feedback loop. That's trading systems. Whatever it is, it doesn't have to. There's plenty of people that don't use this shit. They don't use this. They don't need this. They might use something as simple. There's all kinds of strategies. This is SPY. Let's put it on a 5-minute chart. Wait, Gerald, is this a 5-minute chart? Did you randomly grab a 5-minute chart that looks a lot like the money flow? Now, look at this. This green line helps us, we know. As a general rule, when price is on this side of the green line, it's said to be probably trending down. And when it's on this side of the green line, it's trending up. Take it back. Here, never went below it, right? So it breaks out here. So from here up, what do you have? It builds up. Now, I don't know. Looks a lot like that. Right? Man, that's amazing. It's a 5-minute chart, the S&P 500. It moved through the 4 stages of price movement, fractal. Each little ongoing feedback loop is 5 minutes. On that chart, 5 minutes. Where are we at? Look at that, 5 minutes. Each one of these bars is 5 minutes coming at you, man. Coffee. People that work here are not fast enough. So we see the movement of price. Now here's the thing. It's not perfect. We started to go sideways and then it broke down. Now it's come back. That's a whole nother class. My point is the fractal nature of price drops. It's you can put it on whatever time frame. You could go to a 1 hour chart, and what you're looking for on a 1 hour is the fractal movement of price. Is price trying to break out, or is price breaking down? Looks to be breaking down right now, right? Now, what does this also help us do? Inside of trading, we know there's this stuff called support and resistance. Well, this on a 1 hour chart, what makes support and resistance? Well, it's price stopping where price has stopped before. Now, we saw price stop there, went to go into a breakout, pulled back, and stopped what? Right where it stopped. Now, at first thought, you're like, well, this is a failed breakout. Maybe. Maybe. Look what we see here. It's the start of a sideways movement. So those dreaded whiplash, where you get stopped in and out of a trade, these trading ranges, if you are trading long trends or multi-week trends like I do in swing trading, these can shake you out, man. So the quicker we can identify this starting to build out, the faster. What's the first sign that this may be happening? Well, that it broke out and then came right back down, but then it held support. So immediately I start thinking, okay, maybe this thing's just going to start going sideways now. And you're going to have this process of price bouncing sideways. That green moving average is going to come in and then start going sideways, and you're just going to see this big basing effect taking place. If we look at, a lot of times it's easier to see this on a daily chart. Let's look at 3M. So look at 3M here. Smashes down, and then what? Starts building it out. Now, you're going to, when I first draw that for people, these here, they're going to go, what about that? Yeah, but notice on each of those candles where price closes. The close keeps coming back into this support zone that was formed over here. And what that starts to form is a box or a stage. Okay, so as I'm looking at the money flow pattern, that's the formation that's being made to create a stage 1. Price stops dropping. You say, how can you know? Well, it's the lowest low. Go back 4 bars. Where's the lowest low? And we need what I call an anchor point. Boom, it anchors price. And as it anchors it, it's the apex of the stage 4 decline, stage 1. It goes too far. Often we're notified by this by another indicator called which is an oscillator, and it's called the RSI. And the RSI is just there to help us try to refine. We don't need these things. You don't need a 20-day. You don't need the RSI, but they're there to help you refine. Meaning when that signal's green, I'm looking for a stage 3 anchor point, a highest point. How do I know? Because the next 3 days are below it. It's not complicated. So every day I'm like, okay, day 1, what about the next day? 1 day, 2 day, 3 day. Now on that one, you could say, yeah, it's below it. All right. But is the RSI extreme? Yeah, it's starting to be, right? But as we move up and we track this every day, we can see it's moving higher. One of these days becomes the highest high. And on that highest high, we're drawing a line. And that's going to be the top. Now, usually what happens is it goes sideways for a minute, right? That's usually what happens. It doesn't have to. And that's why we have 6 indicators we're looking at. As they all start to roll over, banged a previous high. What else did it do? It hit a previous place where it has stopped a bunch of times. I mean, how many times did it stop here? So as we watch the pattern and understand the money flow, that as price moves, it stops on a stage 3. Doesn't mean the run's done. It means it's done right now. It's done. It ran. Completed swing. So for me, a swing trade is stage 1, 3. Done. That's it. That's flipping the house. Buy 1, sell 3. You flip the house. Now, if it moves on, does this, that doesn't have anything to do with you. So if you want to be a successful trader, bam, bam. There's no fucking emotional attachment. I'm not all fucking hung up in it. The next day, I don't care. Trade execution. Most people can't do that. They're still hung up on her. Oh, what's AMC? You see what I'm saying? Maybe it moves. Maybe it starts to break down. And then it fucking rips. Your feelings get hurt. That's what trading is, man. Starts to emotionally play on you. People feel some sort of emotional attachment. Well, I bought it here. It's a special bond between me and that stock. This price here is special. Special. I know it has nothing to do with indicators or oscillators or the books or what stocks, but it's just something special between me and this stock because I paid $7 and I really feel like that's where I'd like to sell it back as. You know, I have nothing to fucking base that on other than I just bought it there. So I feel like it's a special bond between me and price. And you say, well, this over here is breaking out. And they're like, yeah, I know. I don't have any money to buy that because me and this loser, we're friends and we have to stay together. And so I'm going to ride this loser. I'm just going to stay with it. I don't want to trim the loser to buy a new winner because of the emotional attachment I have to that stock. Not the account balance, but to that in particular stock that one-time price that I paid, whatever matter a long time ago, it's somehow special. And I have to make the money back with that stock, Gerald. We have a relationship, me and that stock. A lot of people, that's how they talk, man. Act like you're dating a stock. You don't got to make your money back in 3M. You know that, right? I'm talking purely trading right now. This is the conflict between trading, position trading, and being an investor. You can't wear the same hat. Being an investor has nothing to do with going in and out. Being an investor is allocating money to a period of time, 3, 5, 7 years, where it takes for the investment to mature. It's money in. It's money in. That's called investing. There's nothing that happens fucking tomorrow and you're like, oh, now I'm not investing. Now I'm day trading. If you're going through that conflict based on news, you change your position in the stock. Oh, well, Federal Reserve said this, so I guess I'm not swing trading that anymore. If that's how you're trading, dude, stop. You're like a boat without a rudder, man. News flow could change your plan. Like, this is a mental game. Trading is about entry, target, out. Anything more than that, you're not trading. You need to simplify that shit as simple as it can be. That's the great thing about philosophy, man, is it simplifies things. The reason people can live under a religion, you're like, man, how do they live under that? Because it adds order to their chaotic life. Because they're fucking terrified. And whether something's true or not, it provides order. When it's above the green line, you execute. When it's below it, it's going down. Simple as that. That's what religion does, man. It gives you something to center yourself on. I'm not the only person that doesn't know what he's doing. I'm not the only person that's scared. I'm not the only person suffering from ego issues. I got to sell stock where I bought it because me and it's special. People hang up on this, man. You watch. You'll have people hold. You watch. And then, because here's the crazy thing when that happens, dude. And I'm not saying anything. I have plenty of stocks I'm holding. And that was the plan. In other words, my plan didn't change, okay? But let's say something's breaking out. I need money. I could trim 12 stocks, take the money, and buy the new stock. That's not complicated, man. Doesn't change my position on it. And I had a guy tell me, well, you're locking in a loss. No shit. I'm trying to make money. So if I see something setting up, I can wait money from others without closing out the position. I can take 5 off this one, 5 off that one, 5 off this one, 5 off that one, add to here, catch this breakout, run it up, set my target, execute, in, out, thank you for the money. And then I can go back and redistribute it to the other things, man. That's trading. And if you can't move fluid in, out, in, out, in, out without any mind fuck situation, you're not trading. You're doing something else, man. That's trading. That's trading. That's not investing. And you'll never get rich doing that. You're never going to get rich moving in and out, in and out, in and out. Flippers don't get rich, dude. Owners do. That don't mean we don't flip. But you need to understand the mindset difference. Okay? You don't get rich having jobs, by the way. None of you are going to get rich from your job. It's never going to happen. That doesn't mean we don't have jobs. But we got to recognize what it is and what it isn't. Right? And so trading is moving into a stock. And if your goal is to trade and have powder, then you got to have a way to get out of a stock if it moves against you. So in a perfect world, as a swing trade, if I'm trying to swing trade stage ones, once the stage one is identified, right? Once you've identified it, however you're doing it, anchor points, whatever. Like all of these are good. This little area in here, I don't use hard stops. This is a good example while I'm on it. And the reason I don't is I'm not getting stopped out at 8:30 in the morning because of a bunch of wackos reading something in China. So I wait till about 11, 12 o'clock, usually before executing most trades. I don't, a lot of times the market opens up, sells off, opens down, runs up. So like where it opens doesn't mean as much to me as where it closes. And when you do that, you get the ability to finesse these zones. Because if you notice, the market opened below the pivot point, say right there. And then it comes back to close above it. And then it holds it, and then opens below. But if you're watching this, you're like, okay, that's below my pivot point. But then what? It comes back up into it. And so it just keeps confirming this stage one, even though price is pushing down a little bit. Right? So how hair trigger are you going to be? And for me, it's about the zone, and I give it a lot of room. And so I don't really give a fuck if it comes down. I fully anticipate having big winners later. So, yeah, I'm going to, whatever. There goes our break. All the indicators turn, right? This one's pretty textbook, right? Everything breaks out. And then what? So, well, in that situation, we have a zone down here. It's never gotten down here. So we know if it gets down there, what? The nature of the stage has changed. The movement of price has changed. It's no longer in a stage 2 breakout. It'll now be a stage 4 decline, right? So we don't want to own the shit over in here if we're a trader. An investor, we would just hold it and wait for what? Stage 1. And so if I'm trading inside the money flow and I know, okay, I got a stage 2 going, my first point is, okay, I know when it runs up, it's probably going to stop at previous high. Why? Support and resistance. It creates resistance zones. So I'm aware of that, but I'm also aware it doesn't work perfect. So as I'm watching it, this on 3M, if I'm trading this, I fully anticipate these zone over here where it stopped a lot. Right around there, it's probably going to stop again. I actually pull it back a little. And look where it tagged it, dude. Pow, right on the money, dude. If you're a trader, the trade's over. Boom, boom. Now, what happens when you're like, yeah, but I might get more? Okay, you just stepped out of the successful trader mode. Right? You got to have some way of taking this down as it deteriorates. So most of your trade needs to come down. I like to leave some in case it runs. Yeah, duh. We want to do that. But my point being, mentally, I got to know, trade over, stage over, move done. Went from an extreme low, extreme high. Now we're going sideways, and lo and behold, we went down. So the S&P coming down, fully anticipated, right? We hit a 70 RSI. That's our first sign. Hey, price went too high, too fast. And what do we expect? Then it starts to roll. Well, if it goes underneath the green line, so on that Tuesday, where was it? Right here. This is when I text, if you were going to short, now is when you do it. I had people wanting to short up here. You know, it would have, yeah, looking back now, it looks like it would have worked, but that's just not when you do it, man. You don't short strength. I mean, not in the money flow way. You can, but then there's no point hanging out with me. Go do what you're doing. Meaning, I don't give a fuck. Once it's outside the money flow, don't care. Like, all my time, effort, and energy is put into one fucking thing so that I can do it better and better and better and better and better and better and fucking better and better and better and fucking better. Not half-ass change it all the time based on how the fuck I feel. So I'm trying to get it down to just precision, man. Bam, bam. I don't have to be right all the time. I don't care. I'm going to be right over time for certain. I know that. No doubt. I don't need any convincing. Now, am I going to be that way on every single trade? No. Or every single stock? No. Not at all. Okay. Now, I'm not trading this one, but that is a money flow trade setup, right? And that's when you're shorting. That's on the S&P. We sent out that message and I said, hey, I'm not shorting. Why? Because I'm looking for trades to the upside. I don't think we're going to go that far down. Not really that worried about a down move. Not a big deal. But if you are, this is when you hedge. If you are, this is when you get short. If you want to trade to the short side, this is when you trade to the short side. It's the opposite of a stage 2. So people could sit with me for a fucking year and their brain never comprehends that. You know why? Because they're doing other shit, dude. That's fine. Go do your other stuff, man. But I don't know how you're ever going to master anything when you spend so little time on one thing. I mean, cycles. Cycles, man. Cycles. Be careful constantly. And I'm telling you, I've been down that rabbit hole where you just constantly are looking to add something new. And all you're going to get is a shit salad of constant new, never mastering anything. It's terrible, man. It's terrible. I call it style drift, and everyone does it. I don't care who you are. You be my best friend. You're going to style drift. We all do. But you got to constantly be pulling yourself back. You know, at least until you have some sense of mastery. And that takes years, man. Ain't nobody mastered shit. They've been in a market 2 years. Nobody cares. You might quit. I don't even believe you till it's like 5, 7 years. Doing it for what? A few months? Congratulations. Like, that means nothing. It's going to be time, dude. Over long periods of time. You're going to meet almost nobody who does that. They don't stay with it, man. Because they never find one thing that they can believe in. So it's a constant state of chaotic stream in their head. Be careful of that. And money flow may not be for you. That's fine. Go do whatever other thing you're doing. Okay? That's just all the way I've always told people. Like, will you do something else? We'll go do that. Go do it. Like, you know, I'm not looking to be recruited. I'm not looking for something new. This is what I do. And so I try to stay on this path. The moment you're off the path, go do that. You know, you have to be like that, dude, with the people around you. Because your family, your employees, if you own a business, they're going to try to shape you, mold you, correct you, push you. They're going to try to change you. But it's you. You're the leader, man. Like, you're the leader of you and what you do, right? So I run a hedge fund of me. I'm the CEO of everything around me, right? And so rule number 1, you're not going to be bullied. This is what I do, man. It don't change based on tweets or anything. Like this, I stay with this day in, day out because I've seen it work. Like, all you got to do is go back and look, man. Go to a monthly chart. Take it back to 1850. This is it from 1850, man. You just take it back, dude. It goes up. That's the rig game we play, man. And that's the beautiful thing about the money flow. Now, because you're playing a rig game. Now, the shorter you shrink that window, the more skill set you need because the turns in direction. Meaning you can have stage one. You can have stage 4s inside of on a 1 hour stage 4. On a daily, it's still a stage 2. So what time frame are we on? So when you listen to a trader, oh, I'm short Amazon. Okay. It's a stage 2 breakout on a daily, but he's on a 5 minute. So inside of the daily, they can have all kinds of moves, right? So what good would it do for me to listen to that? None. Fuck them. I have nothing to... La, 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 la. I'm not listening, right? But if you allow that to creep in your head, I listen to zero day trade. Don't give a shit what any day trader's doing. Nothing at all. Because I don't day trade, right? My time is so precious and so limited that I can't let shit in that's not part of my plan. Like, that wasn't part of my plan. The moment I can close in on this, man, this is how you add discipline to your investment strategy or your plan, whether if it's dividend investment strategy. 6 months into it, you're not changing it. What information could have come in that you're changing your plan? Fear, right? That's fear, man. So the way that I got to $1 million in the stock market, it doesn't change. Every fucking day, I put money in dividend stocks, period. And then I don't touch them. Hello. Guess what happens? Called compound interest. The market averages 9% a year. Some stocks you buy may go up 400% and pay you dividends. I have tons of stocks that are up hundreds of percent and pay me dividends. Well, you do that for 20 years, guess what happens? You have a lot of money. So if we know that to be true, and I do, then we could shrink it. And you go, well, how can you do that faster? That's trading, right? But we can't confuse trading with investing. Because to be an investor, you have to own it. The moment you sell it, you traded it, right? So make sure you got the right hat on and you're thinking about the right things then, and you're focused on the right mission then, and the clearer and clearer and clearer and clearer you can get into what you trade. Like, you should have a favorite go-to trading stock, like 10 or 12 of them. These are I love trading these, you know? Like, I love trading Twitter. It's one I trade a lot. Not all the time, but when it sets up just right, I trade it. But before I go, this is the S&P 500. I'm trying to keep these under an hour, man. It takes me like 12 hours to do the money flow. The spider, the SPY, it's the spider S&P 500 index, 90 million shares changed. This is the one of the most valuable things on planet Earth. This is money spread equally among the 500 largest companies in America. This is the VU, all those index funds. This is the benchmark of investing. 9% average return a year. 9%. 9%. Right? So that's the benchmark return. So everyone should be getting at least 9% a year on their money, because all you got to do is put it in here and hold it. Inside of this, remember I said fractals, never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again in an ongoing feedback loop. Driven by recursion, fractals are images of dynamic systems, the pictures of chaos. Geometrically, they exist in between our familiar dimensions. Fractal patterns are extremely familiar since nature is full of fractals. For instance, trees, rivers, coastlines, mountains, clouds, seashells, hurricanes are forms of abstract fractals. So when you walk outside and you see it's cloudy, you're like, oh shit, I think it's going to rain. When you walk to your stock chart and you see the 5-day, 10-day, and 20-day converging coming off an extreme RSI, and we have a pivot point, and then we can just back this chart up and go stage 1, stage 2 run, stops and hits first target, climbs up, bangs the RSI, tags the 200, goes sideways, we expect it to go down, literally stops at the signal. Where's it at? Right here. Price breaks under the stage 3. Here's the anchor point where the RSI went extreme. Price started to go sideways. It then closed below the 20-day moving average. Absolutely 100%, literally picture perfect, right out of the book. Written 7 years ago. Why? Because this pattern repeats itself over and over and over. What we don't know is how long each stage lasts. So then, where would my target be? Just like when it goes up, previous low, I expect wherever it stopped before, it'll probably stop again, right? And there's one minor level, and then right around in here is another level. So I fully would anticipate once that happens, it comes all the way down to like 385, 380. They're never perfect levels. But look, the RSI is not extreme. What does that tell you? There's more room to the downside, man. More room to the downside. Right? The extreme stopped it. So it doesn't often go green, 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 right? But it gets super close to it. This is an index. So, it'll come down what? And then what? We're going to be waiting for a stage one. So if I'm a trader, what am I waiting for? The down move starts to move sideways. Now I can start trading different things. Couldn't that help your day trading? Yeah. You every morning you go look and you say, okay, where's the general trend? Well, if the general trend is to the downside, right? It's to the downside, then all my trades are to the downside. If I'm short-term trading like that, if I'm swing trading, the swing trades are going to be to the downside. But here's the thing: can you run a portfolio of some shorts, some longs? Some are position trades, some are investments. At what point does your brain get fucking scrambled and you can't keep track of it, man? That's what happens to most people. They get it all mixed up. So you do this stuff in baby steps, man. Do this in baby steps. So this is a complete down move. So all the longs we're looking for to happen, it ain't happening right now. The market pressure and direction is to the downside until it stops, and then it'll go sideways, and then it'll break out. And over here, I'd have been telling you it's to the upside, right? It's a stage 2. And then how far? Until the RSI goes extreme. Well, if we're below the 200, I can tell you one place it'll stop. On the next run up, you're going to be having a target. Like fast forward a month, 2 months, we're going to be talking about a target of like 425 because that's a previous high. Maybe we'll be talking about 420 because the market will come down, it'll go sideways. The moving average keeps sloping down, and we'll be playing the game over to here if you're trading. And the trade is in, target, out. That's trading. Everything else is some other type of thing you're doing. So the clearer we get on that, the more effective we'll be able to execute on that and operate and live inside of the money flow, man. But real quick, if you're new, inside of this spider, and you should go put these on your charts so you can just run through them like this. Whatever charting. If you're not doing that, if you can't do that on your charts, man, you've got to get your shit together. Where's that page? Did I delete it? Oh, no, here it is. You got to be able to flip through charts like that. If you can't, you're still bullshitting. It's time to stop, okay? It's like you came to the golf course and you bought kid clubs. Like, it's embarrassing. Stop. You got to get your chart game on legit. Like, we're all too old here not to immediately, within 90 days, have a strong chart game. You can set up your charts. You understand ticker symbols. You've got sectors, maybe some indexes you've broke, like the QQQs. You know what the top 20 stocks are inside of that. You got to bring that to the table quickly, right? So this here is the 11 sectors of the spider. XLE, energy, right? And what's cool about this over here is you can come look at it. Well, what's the weight? 4.68%. What's the XLU? Utilities, okay? And when we click that, does it do that on this one? No, we have to go to the other page. But if you go to that sector, we can click on it, and it'll show you the top stocks in there. This is just a quick one. Includes Exxon, Chevron, Schlumberger, EOG Resources, ConocoPhillips. They give you the top 5 there. Well, let's go XLB. If my page would work. XLB Materials. What is materials? Companies involved in such industries as chemicals, construction, materials, containers, packaging, metals, mining, paper products, among other components. Sherman-Williams, Air Products, Newport, Freeport-McMoRan. Well, I've been buying Freeport-McMoRan. Well, this is the XLB. Well, let's look at the XLB. All right. Where were we buying? Over here. It ran up. Tagged. I didn't take any off because I'm just a buyer. So I'm trying to build my position, right? So we bought over here. We bought on the breakout. And then what? No buying, no buying, no buying, no buying. And let me see what day that was. See if we're calling bullshit on GP. Let's see. Hopefully sometimes I forget to log them. All right. Added to buy and hold position FCX. 722. Let's look at the XLB on 722. All right, so it's right there. Oh, man. That's not good for me. Why did I wait till 7:22? I may have waited because I didn't have the money on the breakout day. But if you look at where it closed on the breakout day, I didn't buy the XLP, so we're going to go look at FX. I bought when it pulled back right there. So within 50 cents of that bottom, right? So if I'm trading, dude, that's not tight enough, dude. You needed to buy fucking immediately right there, right? And maybe right there on the stage one because it's now back into this box. So you should spot that. If you're trading, you spot that. The guy says, what scan should I run? Look at the chart. What do you mean, what scan? They got to come to your house? Like, follow this stuff, man. It's not that complicated. You know what happens when you actually pay attention and not outsource it? You learn skills. So yeah, we can filter and run all that shit later. Right now, we're trying to build skills. You need 10,000 hours. You need looking at charts. You need following stocks, man. So it's not complicated to follow 11 things, right? So XLB, and we just saw what the top stocks were inside of that. Okay, and we're watching that. So it's back in the box right here, which means it's probably fixing to break out, which it did. So we come over here. Freeport is our play in the XLB, right? And let's see what it was doing. Now, that doesn't mean we're going to get it right. We may not pick the right stock. That's stock trading. Oh, look, it looks a little different when we put it on Freeport McMoran. I bought it right at the breakout. Right there, baby. Bam. Why? I follow it. I don't need a filter. I'm looking at it. Now, another guy may not want to spend that much time. I don't know what to tell you. I love charts. Fucking love it. Love looking at charts. Love stocks. Love trading. I can't put that in you. So again, the guy may say, why do it different? Okay, well, do something else. I'm not teaching that. I'm not doing it. I'm not endorsing it. I don't like that way. I think it's the wrong way. It's just an opinion. And he would say, well, I disagree with you. Okay, well, go do you. Again, I'm not changing me for you. You can't. People will come away and they chip at you. Little here, little there. This guy chips that. She chips this. They take this. Before you know it, it's not you. Everyone taking something. Hold your ground, man. So, didn't get where we were going. So if we were trading this, we didn't even get to the top, man. So would I be stopped out here? You're going to have to make that call. You got a sell signal, right? You got a sell signal. But to be honest, we're still in basically where we got in. So the trade's run. Now we've come back. So somewhere in here, we got to call this if we're trading. Otherwise, we're waiting. You may get a chance to build it up. And then on the next run up, maybe this level holds and we do tag 38 and you make a hell of a lot more than you would have made if the trade would have just went straight to it. Uh-oh. Did you hear that? You go, what do you mean? Maybe maybe we were trading it and we were trying to get to the 200. We're in and we're out. That's the trade. And it doesn't quite get there, pulls back, but it holds our original spot, goes sideways for a couple weeks. The S&P bottoms out, and this is still holding, still above our stop. And the S&P bottoms, S&P goes stage one. S&P looks like it's going to run. Well, guess what this is going to do? It's going to run. So now you got a chance to build up the position. It's a larger trade now for the same risk. Right? That's philosophy. That's understanding the money flow, that it flows in, flows out. It's never going to end. The game keeps playing. Stop. Don't panic. Just practice. Put in reps, man. Practice. Follow these stocks. Anybody can follow 11. So that was the XLB. Okay, we got one stock in that. So look how fast we could accumulate 11 stocks, different sectors, and we could trade them. So you could be, okay, I'm going to get me one go-to oil stock. I'm going to get me a go-to utility. I'm going to get me a go-to, what is the XLK? Let's see. XLK, primary covering products develop internet software and service companies. NVIDIA, everybody asked me. So there you go. Now you got one of those. And then you get over here and let it grow. Well, I don't know about chemical companies. Well, DuPont, go buy that one. Come over here. XLP, what's the XLP? Companies primarily involved in development and production of consumer products that cover food, drug, retail, and beverage. You know, all the stuff you're smoking and eating. Oh, you guys sitting on the couch eating Doritos. drinking beer, smoking weed, all that's right here. Watching Netflix, got your feet up, not doing shit. Everybody consuming, that's this right here. Doritos, Pepsi. Now, do I want to be in that? Yeah, man. So if you ever look at stuff that I own, let me pull it up over here. So look at this. Southern. It's my largest holding, right? It says 19 grand in Southern. So if we look at the XLU, what the hell, man? I don't know why their page sucks. They have an app for this that works much better. You can put it on your phone. XLU, okay. The companies included Nextera Energy, Duke, Southern, Sempra, and Dominion, D. Now, I own Duke, I own Dominion, and I own Southern. So why? Because these are the top players in this ETF. So when this ETF goes on sale, I usually buy a different one, meaning I'm not always adding to Southern. I'll start building a position in Duke, holding Southern. And as time goes on, because of these 11 sectors, as I study these, well, what's the XLY? Industries such as retail, automobiles, components, consumer durables, apparels, hotels, restaurants. This includes Amazon, Tesla, Home Depot, McDonald's, Nike, probably say Ford, right? And so as we learn this, as we watch this ETF, right? If we're watching the 11 sectors, XLY, we see it going down, right? You're going to see, generally, they're all going to follow the SPY. But what we're looking for, which ones are different? So when all the market's going up, I'm looking, which sectors are lagging? Like I want to build those up because they don't stay lagging. Remember when oil was the shit stocks? It's not anymore. It's the winners. Whatever the shit stocks now become the great stocks later. It rotates back and forth. So as an investor, that's not trading. I want to utilize that information to, one, learn all these things. How am I going to be an investor if I don't know these things? XLI, XLC, communications, XLV, right? Like I need to know these so that I can be an investor. But also by learning those, it sets up for trades. And when you know all this shit, what do you need to, you don't need to spend a lot of time filtering things. If you're following 100, 150 stocks pretty closely, you're tuned in with the stock market, you see the ups and downs, you know where precious metals are, you know where crypto is, you know where bonds are, you know where REITs are, you know where growth stocks are, penny stocks, biotechs. It ain't that much shit, man. But if you do it day after day after day after day, guess what? You know things. God gave you a brain. And if you stay with it, that's called skill set. You're going to begin to develop skills. You're going to be able to see when shit's on sale. It's not complicated. If something's cheap, you just need a way to value it. And once you have a value system that you trust, getting rich is simple. Simple. It's just not easy. It's simple. 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 Right? Simple. Super simple, man. Get on this stuff, man. If I can help you, man, I appreciate everybody who comes to the Sunday service. Focus on that big picture, man. Your mindset, the philosophy. What is your philosophy for buying stocks? What is your philosophy for holding? What is your philosophy? And that's going to be your saving grace, man. Your philosophy. You guys be good.